In 20 years behind a bank desk, I watched hundreds of people cross the same line, 30 days past due on a credit card. Some of them didn't even know it had happened yet. Some knew and figured they'd deal with it later, and a few came in the moment they realized, ready to fix it. Here's what I never told you in the last video. It's what happens after that 30-day mark that determines everything, because from day 31 forward, the clock isn't just ticking, it's compounding. This is part 2 of what happens when you stop paying your credit card. If you haven't seen part 1, the first 30 days, I'll link it above. But even if you're jumping in here, you're going to want to stay, because right now, you may still have options that disappear fast. When you hit 30 days past due, that means 30 days have passed since your payment was due and you haven't made it. Your lender reports that to the credit bureaus. Equifax, Experian, TransUnion, that's not a threat, that's not a warning, that already happened. What shows up on your credit report is called a 30-day late payment. You'll hear people say late payment casually, but the term you'll actually see is 30 days past due. That distinction matters because the damage stacks in 30-day intervals. Here's what that means for your credit score. A single 30-day past due mark on a good score, 720 or above, can drop it anywhere from 60 to 110 points, not because you're a bad person, because payment history is 35% of your credit score. It is the single largest factor, and you just missed one. That mark stays on your report for 7 years, but here's what most people don't know. The impact fades over time as long as you stop the bleeding. The question is whether you stop it now or let it get worse. Here's where I watched people make the most costly mistake. They missed a payment, they saw the late fee, they felt embarrassed, and then they avoided it. Didn't open the statements, didn't answer the calls, just let it sit. I understand that instinct. When something feels overwhelming, avoidance feels like relief. But with credit card debt, avoidance is gasoline. Because at 60 days past due, that's 2 missed payments, a second late mark hits your credit report, another wave of damage on top of the first. At 90 days past due, 3 missed payments, a third mark hits your credit report, and this one is serious. 90 days past due is the point where lenders begin internally classifying your account as a problem account. Some start the charge-off process, some accelerate collection activity. The credit damage at this stage is severe and long-lasting. Meanwhile, late fees have been stacking every single month. Penalty interest rates, which can reach 29.99%, may have triggered. Your minimum payment has increased because you now owe back payments on top of the current one. I had a customer, someone I'd worked with for years, who came in at 60 days past due. She'd been laid off unexpectedly. She knew she'd missed the first payment, but assumed the second just got lost in everything she was managing. When I pulled up her account, she went pale. She didn't realize 60 days past due meant 2 separate late marks were already on her credit report. She thought she was dealing with one problem. She was actually dealing with 2. The good news? She came in at 60 days, not 90, not 180, and that made all the difference. Let's talk about what's happening on the other side of the phone you've been avoiding. In the 30 to 90-day window, your account is still being handled internally by your credit card company. You have not yet been sent to a third-party collections agency. That typically happens later. Right now, you're dealing with the original lender. Federal law limits when and how often collectors can contact you. But in this window, your lender's internal team is reaching out by phone, by email, by mail. They are not calling to punish you. They are calling because they want to recover the debt, and they have options to offer. Pay attention to the letters you're receiving. They contain deadlines, account status information, and sometimes, buried in the language, information about hardship programs. Your account may also be frozen. Many lenders suspend your ability to make new purchases at 60 days past due. Your credit limit may still show on paper, but the account is functionally closed for spending. None of this is irreversible yet, but the window to work directly with your lender before outside collectors get involved is closing. Here's something I want you to hear clearly because it was one of the most underused tools I saw in 20 years of banking. Credit card companies have hardship programs. They don't advertise them prominently, they don't lead with them in collection calls, but they exist, and in the 30 to 90-day window, you are still eligible to ask. A hardship program, sometimes called a financial hardship plan or a payment assistance plan, is an agreement to temporarily modify your account terms. That might mean a reduced interest rate, waived late fees, a lower minimum payment, or even a temporary pause while you stabilize. These programs aren't charity, they're business decisions. The lender would rather keep you as a paying customer on modified terms than write off your debt entirely. That math works in your favor if you use it. Here's how to approach it. Call the number on the back of your card. Ask specifically for the hardship or financial assistance department. Be honest about your situation. A job loss, a medical event, a reduction in income. That is the language that opens the door. What you say matters. I want to pay this. I need help figuring out how is a very different conversation than silence. A few things to know before you call. Enrolling in a hardship program will typically freeze your ability to use the card going forward. It may be noted internally on your account, but it should not itself appear as a negative mark on your credit report. And not every lender offers the same terms. Get everything in writing before you agree to anything. I had customers who called at 45 days past due, got their interest rate dropped from 24% to 9% for 6 months, caught up, and came out the other side with their credit score recovering within a year. It doesn't always go that way, but it can, and it starts with a phone call. Whether you're 30 days past due or pushing toward 90, here is what I want you to do. First, pull your credit report. You can do it for free as often as once a week through the official bureaus or through a free monitoring app. Look at what's already there. Knowing where you stand isn't scary. Not knowing is. Second, open the statements in the mail. I know it feels easier not to. Open them anyway. Late fees, penalty rates, account status. You need to see the real number you're working with. Third, call your lender before they call you. In this window, you still have negotiating position. Use it now. Fourth, if you're managing multiple cards in this situation, prioritize the one closest to 90 days past due. That's the fire that needs water first. Fifth, don't make new charges on cards you're behind on, and do not close accounts you're current on trying to simplify things. Closing a current account can hurt your credit score separately. Leave what's working alone and focus on what's broken. These aren't complicated steps. The hard part isn't knowing what to do. The hard part is doing it when you're stressed and embarrassed. But every person I watched come out of this did one thing first. They picked up the phone and called, or they came in to discuss. The 30 to 90 day window is painful. I won't pretend otherwise. You're dealing with credit damage that's already happened, fees that keep stacking, and a lender that's getting harder to ignore. But this is still the window where most people can turn it around if they act. The ones who didn't stop it in time, that story gets harder. At 90 days past due, something changes. The word charge-off enters the picture, and the people calling you aren't from your original lender anymore. That's what we're covering next. If you're already thinking about what recovery looks like on the other side of this, I've got a card on screen right now. It'll take you to my video on how to rebuild your credit score. If this video helped you out, consider clicking on the recommended video on screen, or if not, I'll see you in the next one. And if you're not subscribed yet, consider hitting that button so you don't miss what's coming. Thanks for watching.